Hello guys and welcome back to another video in this channel. This is Selena and I'm talking from Selena Trading Moves. Thank you guys for the support I've received in the past few days. It's been a pleasure to make videos for you guys and help you understand how the financial market works. So yes, make sure to follow also if you're not subscribed to the channel yet, and make sure to like and support because it helps me a lot to give you more insightful content and post more videos in this channel. So every day at 9 p.m. 20. I'm always live here. We also trade live together. We can watch the opening of the market together and analyze what's happening in the US market. So let's dive into today's video. So the title is why this market feels easy, but it's actually dangerous. Right now, if you open social media, it feels like everyone is making money. Stocks are going up, dips are getting bought, and every pullback looks like an opportunity. And naturally, that creates a very dangerous belief that this market is easy. But let me tell you something very important. The market is at its most dangerous when it feels the easiest because what's happening right now is not just price movement, it's conditioning. The market is training traders to behave in a certain way, and the problem is that behavior only works until it doesn't. So let's break down what most traders are experiencing right now. You buy a dip, it works. You choose a breakout, it also works. You ignore the risk, nothing happens. And after a few wins, your brain starts making a conclusion. I understand the market now. But that's not what's happening. You're not understanding the market. You adapt into a very specific phase of it. So every market phase rewards a certain behavior, and then it punishes it later. Think about it like this. If you're to a casino and win 5 times in a row, does that mean you're good at gambling? Or does it mean the odds haven't caught up yet? Now, let's zoom out and understand why the market feels easy. Well, number one thing could be concentration. A small numbers of stocks are doing most of the work. You've got big tech, AI related names, and they got caps driving in the indices. So here we're talking about biggest stocks in the US market. For example, NVIDIA, Apple, Tesla, Microsoft, and also Amazon. So if you're in those names, you think the market is strong, but you're outside of them. The market feels random and difficult. So this market has been supported by expectations of rate cuts, strong institutional positioning, and narrative-driven flows. So the key line is this is not a broad market trend line. It's a targeted capital flow. AI, tech, growth. These are not just sectors, they are stories. And markets love stories because stories allow investors to justify higher prices. So the stronger the narrative, the less people question valuation. Now, let's talk about where most traders go wrong. Well, they buy after big moves, they interlate, increase size after wins, and they ignore the downside. And here's the dangerous part. It actually works. That's what traps people because success reinforces behavior. The market doesn't trap you with losses, it traps you with wins. At first, you're very cautious, then you become too confident, then you become more aggressive, and that's exactly when risk is highest. Now, let's flip perspective. What retail does chases trend, buys breakouts late, reacts emotionally, and what does smart money do? It accumulates early, it builds positions quietly, and sells into trend. Now the key line is, they don't buy when things look good. They sell when things feel safe because institutions understand something very, very important. Liquidity comes from retail. So when retail is aggressively buying, someone is selling to them. Now, this doesn't mean the market will crash tomorrow, but it means the risk is increasing while confidence is also increasing. That combination is very, very dangerous because every market goes through a transition phase. It doesn't go from bullish to bearish instantly. It goes from easy to difficult, from clear to confusing, and from smooth to volatile. Now, what changes first? Breakouts fails, dips don't bounce immediately, and volatility increases. And most traders don't notice it at first because they're still thinking in the old environment. Though the strategy that made you money starts losing you money with time because most traders don't adapt. They double down, and that's where losses accelerate. Now, let's talk about what actually works. Well, first of all, you have awareness. You don't need to predict the market. You need to understand the phase. You don't have also you have to have risk management. This is where most people fail. The increased risk when confidence is highest. You should be more careful when you feel most certain. And also patience because opportunities don't disappear. The bad entries do. And if conditions change, your strategy should also change. You have to be flexible and you have to have adaptability. Now, let me give you the most important mindset shift. Stop asking, what should I buy? You should ask, what is already crowded? Where is the risk hidden? And who is on the other side of my trade? Because the market is not about finding opportunities, it's about avoiding those traps. So, here's the bottom line: this market looks easy, but it's building risk under the surface. And the traders who survive are not the ones who make the most in good times, but the ones who lose the least when conditions change. Because the goal is not to win every trade, it is to stay in the game long enough to understand it. So I hope you guys learned a lot from this video today because it was very insightful. It was very, very deep. Then I want to ask you guys, have you ever felt overconfident recently? Or do you also think this market is sustainable? Because this is very important. This is so important in your trading. If you're overconfident, that's gonna hit you so bad. And if you're not confident, it's also a bad thing. So you should always be stuck in the middle. Don't be too over and don't be under. Be normal, okay? So if you guys got any questions about this video or any other topic you want me to cover in my channel, please let me know in the comment section. I read all the comments and I reply daily to all the messages. So make sure to go to the first comment in the comment section. You'll find the link. Just click on the link and go to my WhatsApp. You can ask me, and I will be there waiting for you guys. So, we're trying to build a great community of traders and investors in the US stock market. And then we will trade together, and I will give you a lot of useful and insightful tips that will help you to trading. So, thank you guys, and I wish you have a nice day of trading.